So today what we're going to do, we're going to cover a few topics. We're going to talk briefly about Russia. You put out an interesting blog post on that. I'd encourage people to go look for it on the ETF Think Tank website, and the exclusion of Russia from indexes. We'll talk about inflation, talk about the Fed. We'll talk about the impact of war on markets, and we'll talk a little bit about the equity performance outlook. So let's start with Russia. You put out this blog post, and it's essentially, recounting for people what it is, why it is that Russia got excluded from a number of indexes, and what the impact might be on ETFs and so on. Tell us a bit more about that.
Yeah, so what happened, which feels almost like a lifetime ago in market days, it was the fact that one, the sanctions, and two, just the closure of the Moscow exchange at the beginning of the Russia-Ukraine conflict basically made Russian stocks uninvestable by, practical standards from index providers' perspective. You couldn't really access them, you couldn't really trade them. And so what naturally happened is indexes then started excluding these stocks from all sorts of portfolios. So it impacted everything that was an emerging market ETF, for example, that had allocations to Russia. It impacted just Russia equity ETFs. They had to basically be shut down because there is no way to trade the underlying and no way to price those stocks. And so I think it hit people by surprise because it all happened so quickly. We had that happen, I think it was 2015, when the Greek stock market closed for 3 weeks. And so people were concerned, how do you price Greek stocks? But ETFs continue to function. This time around, in less than a week, these stocks it was announced, they're going to be excluded, it's over. So I think it just caught people by surprise. But given how long the conflict has been going on, I think was, inevitable. And so they remain impossible to access. The good news is, if it had been a China, for example, which is 30-40% of emerging market indexes, it would have been a huge impact. But Russia, when that first happened, was maybe 3% of the weighting in emerging market ETFs, broad emerging market ETFs. So it was a minimal impact from that perspective. But so that was the first time.
I'm going to touch on China in 1 second. So actually in OGIG, which is our global ETF, we actually, in our rules, exclude Russia. So this is years ago. We decided Russia is uninvestable, and it will never be an OGIG. And we also looked at what happened as a result of the invasion as being kind of a bit late. In any event, we've also studied China. And of course, the Russian impact is driven by sanctions, whereas the Greek impact that you referred to is not driven by sanctions, it's driven just by, it's called market liquidity issues. So China could be subject to sanctions if they go after Taiwan, and probably will be subject to sanctions if they go after Taiwan. And it could involve the same kind of shutdown of markets. What are your thoughts on that?
Yeah, I hate the idea of predictions, but I think I am actually really curious what would happen then, because I think from just a market perspective, it's a lot easier to cut out Russia from portfolios and access to Russia than it will be China. I mean, China is the size of the Chinese economy, just the pervasiveness of China in every aspect of markets today. I think would be much more difficult. I mean, from emerging markets exposure alone, you're talking 30-40% of portfolios is tied to China. How do you get rid of that overnight? So I think it would be really interesting, because in terms of the principle of it, it should be the same treatment. It becomes uninvestable if there's sanctions, then you can't really trade these stocks, so they should come out. But will they? I'm not sure how they're going to handle that. I think the impact may be just too great to take that strong of a stance. I mean, what do you think?
I think it depends who's in the White House and whether they put principle over economics and so on.